Hello everyone, this is Yazdan from HPD here, and welcome back to another fundamental analysis overview video starting on the 10th of February. Just like always, we'll be discussing our fundamental biases on the different countries and their currencies. And just another heads up, guys, we are not financial experts. This is not financial advice. This is just our biases as traders at HPD Trading. So please trade accordingly. And with that being said, yes, and that's just another big week for the financial markets. How can it not be, with Trump being in office and making the threats about tariffs, and all the global really tensions that are occurring with Trump being in office. So with that being said, let's just discuss quickly about the previous week's data, quantitative data that is released. The two really the biggest ones are the employment data from the dollar and United States dollar and CAD, and the Bank of England's rate cut. So quickly, just discussing what happened. The Bank of England unanimously decided to cut rates by 25 points, with two voting to cut by 50 points, which obviously definitely devalued the British pound more than markets had intended or had forecasted. And going with the United States, so the unemployment rate decreased both for the United States dollar and also decreased for the Canadian dollar, which can result in boosted inflation, with non-farm payrolls less jobs being added than expected, and more jobs for the Canadian dollar. So let's quickly go through each index and talk about the news relating to what. So the United States dollar definitely at lower prices, definitely at cheaper areas. With this video is being recorded on a Monday and definitely will be uploaded by on the Monday. And the biggest news that came out is the Trump's plans to impose 25% tariffs on steel and aluminium imports. So this came out today. And it definitely any mention about tariffs, any big statements made, will definitely move the market here. And we don't have an exact date on when Trump wants to impose these tariffs, but he definitely wants to probably do it as soon as possible, with the deadline of the Canadian and Mexican tariffs, coming up very soon by the end of the month. Also, he wants to, announce tariffs on those countries that tax U.S. imports. So definitely more drama on the trade wars, and honestly, in trade wars, not too many people win. Most people lose in trade wars. So we'll definitely see how that affects. We believe that it's not going to really affect the financial markets in a positive sense. When it comes to the US importing steel and aluminium, Canada and Mexico, we're up there definitely with steel, with aluminium. Canada is really both of the biggest exporters to the United States. So that will definitely not have a good effect on the Canadian economy if he's also going to tax the steel and aluminium. So having a look at the United States dollar, we can see that it's at lows, so we definitely have a buy bias, and maybe look for some pullbacks to get into trades. For euro, not much crazy news. We did see CPI flash come out last week, which shows a bit of greater inflation. Where is it? Sorry, I cannot see. There it is. A bit of greater inflation, but the stance of the euro hasn't changed much. They're still looking for gradual rate cuts throughout the year, and having a look actually at the. Always this is a great article for any trader to have a look. And you can see the ECB 86 basis points, and 97% of the rate cut happening at the next meeting. So definitely, it still remains the the second biggest, central bank that, the central bank that will cut rates, the most, second most. So 86 basis points, gradual rate cuts happening. We still have a sell bias on the euro. Definitely look for some pullbacks we don't want to sell at, cheap areas. You want to sell at expensive areas. For the Japanese yen, a lot of appreciation from the yen, mainly just because, anytime any statement that is made about, hiking just completely boosts the strength of the yen. And not so much different from this week, from last week. The Kuroda says the Bank of Japan to stay on rate hike path as deflation has ended. So they're very confident of, of the rate path of, getting these hikes done. Especially if he has a deadline, not a deadline, but he definitely says that the authorities should at least double the benchmark rate from the current 0.5% by early next year. So definitely they want to get these rate hikes done as soon as possible, really. And not as soon as possible, but appropriately, and getting it done with the fear of deflation ended. The rate hikes are definitely going to be normalized, and that is coming from their hawkish board member. So it'll be definitely interesting to see what Ueda talks. Ueda, who has been the head of the central bank, what he says. But I do believe that the sentiment from the Japanese yen has shifted to more confidence, more hawkish confidence. Moving on to the pound, as we can see what I was talking about. So the rate cut was on the 6th. So definitely a big movement for the British pound, and I do believe that the markets had already priced in the rate cut, but with the two voters voting for a 50-point rate cut, definitely devalued the British pound more. And so we still see the pound being one of the weaker currencies. However, the United Kingdom might be one of the countries in the G10 that may be at least affected by the US tariffs. And the reason I say that is because Trump is targeting countries that have great deficits, when it comes to their imports and exports. So countries like Canada, countries like Mexico, the Eurozone, China. And the United Kingdom isn't really, doesn't have a big deficit with the United States. So they're not very prioritized. And also the UK is not in the EU. So any threats and any tariff threats that the EU gets, the United Kingdom, we don't share that. So we could see some appreciation from the pound just from these tariffs. However, of course there is that global, I believe it's a global 10% tariff that will be in place. So we'll just have a look, but we still have a sell bias for the pound, at least at the moment, especially with stagflation concerns. With not much growth rate, not much GDP growth rate, as well as very high inflation. Until the stagflation concerns are over, we definitely see the pound more of a sell. For the Canadian dollar, we could definitely see it's at some great highs. However, we have a sell bias on, at least I have a sell bias. I think Kevin might have a different bias on the Canadian dollar. But taking a screenshot of Trading Economics, comment here, talks about the Canadian dollar, how it reacted off the labour market data. Which limited urgency for the Bank of Canada to cut rates. Canada unemployment fell to 6.6% in January, defying expectations to rise to 6.8%, and easing concerns about labour market weakness. So pretty much adding to the dovish outlook, the Bank of Canada plans to resume asset purchases in March, aiming to restore secondary market bond purchases by 2026. So any mention about asset purchases, it's just quantitative easing. They want to boost the money surplus throughout the economy, increase inflation. And definitely, I think they are on edge on exactly what to do because of these US tariffs. They might hike, they might cut, but regarding these tariffs, we don't really see the Canadian economy doing well when, after these tariffs are in place. So we definitely have a sell bias, or at least I have a sell bias for the Canadian dollar. Australian dollar, a bit of an auction range here. It's really just, it's auctioning. Price isn't really making any big, sudden movements. With the Australian dollar, they still haven't cut any rates, but it is they are beginning their rate cut cycle. So 80 points, 85% probability of a rate cut at the upcoming meeting. So definitely, at the moment, you can make the argument that it's still one of the stronger currencies compared to the Bank of Canada, the Bank of England, RB, and definitely the RBNZ. We definitely see the RBNZ being more dovish than the RBA at the moment. But when they do begin their rate cut path, then definitely some more bearish movement. However, you can really, you can look for buys as well. You don't necessarily have to look for sells all the time. You can, if you're, a trader that trades on contrasts, then go ahead, please. And New Zealand dollar, the central bank that will cut the most, 110 points, a 57% probability of a 25-point rate cut in the next meeting. So definitely, it's very hard to justify for a hike. Sorry, not for a hike, for a hawkish price movement for the RBNZ when they are going to cut the most, and obviously interest rates are very, very, very crucial to the strength of the currency. And the Swiss franc, definitely interest rates are low as it is. They don't have much to cut. We only have 40 basis points to cut anyway, with a 92% probability of a rate cut in the next meeting. So the markets are pricing that in, as well as interventions that the Swiss National Bank are doing, which they have confirmed that they will be continuing to do that whenever they do see fit. So yeah, definitely, I think most countries we do see as a sell, apart from the United States dollar and the Japanese yen. And just look for pullbacks, guys. Look for it's just like buying and selling. You want to buy at good prices and you want to sell at good prices, and that's it. That's the essence of supply and demand. So, and that's really what it is. That's all. Trading is overcomplicated, most times, and it's not that complicated when it comes to technicals. Fundamentals play a massive role in the financial markets. Like, never neglect the fundamentals. So, having a look at next week's data, we see many of the governors are going to be having speeches. The Governor Bailey from the Bank of England, Jerome Powell is going to testify to Congress on Tuesday, so that'll be very interesting to watch. Definitely a big week for the United States dollar, especially with the CPI, which might be one of the biggest quantitative data releases like in this month, because the Fed are very, very hesitant on making any decisions regarding rate cuts because of they're going to find it very difficult to differentiate high inflation from the rate cuts and tariffs. So they want to let the economy, they want to let the sentiment cool down a little bit and then see what the situation is. And the CPI data is going to be very, very crucial to getting a better idea of what's going on in terms of inflation and when they're going to cut. Because definitely the Fed, I think, looking at Bloomberg articles last week, we're definitely just looking to hold at the moment. And there's, of course, another metric of inflation, PPI data, which can be very big considering tariffs. The whole point, the purpose of tariffs are to of course Trump talks about cooling down fentanyl getting into the United States and immigration, but obviously the main reason for the tariffs is to boost United States manufacturing and not just more jobs for the United States, for the American people, and so definitely we'll see. PPI will be very, very big as well this week. as well as retail sales too. So definitely, I don't think the retail sales will have priced in any big changes from the tariffs. So I think the next retail sales will be a lot more important, but still something definitely to look at. So yeah, definitely that. Pretty much it, guys. Just trade responsibly and look for pullbacks. Okay, guys. Thank you very much for watching. I hope this video has been very helpful for you guys. Definitely more videos to look out for. And let us know what you guys want. But with that being said, thank you guys, and see you next week.